Welcome to the National Debt Series. In the first part, we talked about the basics, why the U.S. gets into debt and how. Now let's look into the biggest U.S. debtors and how that can affect investors like us. By the end of 2021, the federal government had $28.43 trillion in federal debt. While the $30 trillion figure by itself doesn't seem to mean anything, it will help if we peg it against certain measures. First, Social Security is the government's biggest debtor by a long shot. Social Security Trust held $2.908 trillion in Treasurys as of 2021. The next largest agency was the Military Retirement Fund at over $1 trillion. Other large holders of debt include the Office of Personnel Management Retirement and Medicare. So listen about this. Let's think about it. If you add the debt held by Social Security and all the retirement and pension funds, almost half of the U.S. Treasury debt is held in a trust for retirement. Current and future retirees would be hurt the most if the U.S. ever were to default on its debt. That's you, your partners, parents, kids, that's every American. We would be hurt the most. Next, you have to think about is the public debt. Public debt is about as large as the economy. In a decade or less, it'll be larger than any time since World War II. So imagine this, you own $5,000 in assets, but you also have $5,000 in debt. That's where our country is right now. We owe Japan more than $1.3 trillion in U.S. Treasury. It is the largest foreign holder of the national debt. The second largest holder right now is China. We owe them $1.07 trillion. Third is the UK at $699 billion. Good news is that Japan and China want to keep the value of the dollar higher than the value of their own currencies. This helps to keep their exports to the U.S. affordable, which helps keep their economy going. The U.S. Ratio of debt to GDP, the measure most commonly used to gauge a country's level of indebtedness, places it among the most indebted countries in the world. According to data gathered by the World Bank last year, the country with the highest debt to GDP ratio is actually Japan, which carries debt equivalent to 257% of its economic output. Other developed economies with very high debt to GDP ratios include Greece at 207,000 and Italy at 155,000. The US comes in at 12th place with a ratio of 133%. Now here's the kicker. $30 trillion in debt is beyond ridiculous, but most politicians don't really care. Why? Because they won't be paying for it. Someone will, it won't be them. It'll probably be us or our children. I hope that provides a better understanding of how and why the national debt keeps on going. As we go through the rest of the series, we hope that all this information will come together and help you understand exactly why you can't rely on cash in a savings account to provide you a better life, especially after retirement. In the next video, let's talk about the debt ceiling.